Next sum, ICAI sum number 4, May 2022, 10 marks. Alpha Limited is a manufacturer of the computers. It wants to introduce artificial intelligence while making computers. The estimate annual savings from the introduction of AI system is as follows. Reduction of 5 employees with an annual salary of 3 lakhs each. Reduction of rupees 3 lakhs in production cost by inventory problem. Reduction in loss of sales is 2,50,000 and gain due to timely billing is 2 lakhs. The purchase price of the system of installation of AI is 20 lakhs and installation cost of rupees 1 lakh. 80% of the purchase price will be paid in the year of purchase, that is 16 lakhs rupees, and remaining 4 lakhs will be paid in next year. The estimated life of the system is 5 years and it will be depreciated on straight line basis, so tax benefit on depreciation will be important. However, the operating of the new system requires 2 computer specialists with an annual salary of 5 lakhs. Now this is my cost. See, this all was my savings, but this is my cost because of artificial intelligence machine. In addition to the above, annual maintenance and operating cost for the 5 years are as below. Now please understand, for only this figures, all 5 years figures are different, so this I'll be taking separately. This all I will be taking from 1 to 5 years together. Maintenance and operating costs are payable in advance. So maintenance and operating cost will be an excellent point. The company's tax rate is 30%. Present value interest factor at the rate of 15% is only relevant because required rate of return is 15%. 10 and 12% are just given for your confusion. Evaluate the project by using NPV and PI. So we need to do it by both the methods, NPV as well as PI. Alright. Let us start with savings 1 to 5 years on per annum basis. What are the savings? Reduction of 5 employees of 3 lakhs each. Rupees in lakhs. Employee cost 15 lakhs. Reduction in production delay 3 lakhs. Reduction in loss of sales 2,50,000 and gain due to timely billing is 2 lakh rupees. Total will be 22.5 lakhs. From 1 to 5 years. Now please understand, there is one cost. 5 lakh rupees per person with 2 computer specialists. So there will be additional cost of 10 lakhs rupees because of this AI system minus additional cost. 5 lakh rupees at 2 employees is 10 lakhs rupees. So 12.5 lakhs will be nothing but my savings in cash, but it is before tax. So what will be after tax savings from 1 to 5 years? 1 to 5 years, 12.5 multiplied by 0.70. 1 minus T, I am directly finding out after tax. 12,50,000 into 0.70, that is 8,75,000 rupees. Multiplied by present value annuity factor at the rate of 15% for 5 years. What I could have done, I could have totaled out this, but more better is you just do 1 divided by 1.12, sorry, 1 divided by 1.15 is equal to m plus is equal to m plus is equal to m plus 5 times. Let me do it. 1 divided by 1.15 is equal to m plus 1, 2, 3, 4, 5. MRC is 3.3521. and 3.3521 into 8,75,000 will be 29,33,135. What is this? It is present value of the savings excluding my maintenance and depreciation. I have already found out the present value, so no need to again find out. All right. Let me do this. Present value of savings 29,33,135. And now let us go to depreciation. What will be depreciation? Depreciation will remain same because it is on straight line basis. No scrap value is given. The cost of the machine will be 20 lakhs plus installation cost of 1 lakh will be always considered in depreciation. So 21 lakh divided by 5 will be my depreciation will be 4,20,000 rupees. This will be depreciation per annum. Depreciation is not a cash flow, but a tax benefit on depreciation is relevant. So how to find out the tax benefit on depreciation? It is 4,20,000. We should not do 1 minus T. 1 minus T is to find out after tax cost. We need to multiply T, which is 0.30. So 4,20,000 into 2.30 is 1,26,000. Tax benefit on depreciation will be also for 5 years. So what will be present value of tax benefit on depreciation? Will be 1,26,000. I can use the same factor 3.3521, which will be 1,26,000 into 3.3521, which is 4,22,364. ₹4,22,364 will be tax benefit on depreciation, which will be my cash flow. Depreciation is not relevant. Tax benefit on depreciation is relevant, and it is benefit. So I'll be writing it in positive 422,364. It is a present value of tax benefit on depreciation. Let me go to, there is scrap value. No, there is no scrap value. So we will not be considering scrap value. The estimated life of the system will be 5 years. All right, that we have considered. We have considered this. Let me write down what all points we have considered. Present value of cash outflow. All right. Maintenance and operating cost. Please understand, they are payable in advance. So if I write down this, end of 0, 1, 2, 3, 4 and 5. What is my maintenance cost? They are payable in advance. 2 lakh payable at the beginning of first year is at the end of 0 year. Payable, these are all cost. 1,80,000 beginning of second year is end of first year. 1,60,000, 1,40,000 and 1,20,000. And there is nothing at the end of fifth year because it is paid in the beginning of fifth year. These are my cash outflows. But before considering taxation, please try to understand now tax benefit on this cash outflow. See, if I write down cash outflow with positive figure, tax benefit I should write down with negative figure, right? So what is a tax benefit on 2 lakhs rupees is very simple. Is a 2 lakh multiplied by 30%, right? Which is 60,000. But this tax benefit will not happen at the beginning of the first year or at the end of 0 year. This tax benefit will happen at the end of first year. See, even if you are paying on the first date, the tax benefit always happens at the end of the year. So what is the tax benefit is 60,000. This will be 1,80,000 into 0.3, which is 54,000. One lakh 40,000 into 0.3 will be 42,000. Sorry, 1,60,000 into 0.3 will be 48,000. 1,40,000 multiplied by 0.3 is 42,000, and 1,20,000 into 30% will be 36,000. These are my tax benefit. I am considering cost, so benefit I am writing it in negative point. So what is my net cash outflow? Net cash flows, which is outflow after considering tax benefit. This will be 2 lakhs rupees. This is 1,80,000 minus 60,000 is 1,20,000 rupees. 1,60,000 minus 54,000 is 1,06,000 rupees. 1,40,000 minus 48 is 92,000 rupees. 1,20,000 minus 42, 78,000. And this is negative 36,000. What I will be doing, I will be finding out the present value of cash outflow. This all are cash outflow. Now I will be finding out present value. How I will be finding out present value? First, let me write down factor. This is 1.870, 0.756, 0.658, 0.572, 0.497. And I need to find out present value of this cash outflow of maintenance. I can just use my calculator and find out the answer. 2 lakh m plus 1,20,000 into 0.870 is equal to m plus 1,06,000 into 0.756 is equal to m plus 92,000 into 0.658 is equal to m plus 78,000 into 0.572 is equal to m plus 36,000 into 0.497 is equal to m minus. MRC is 4,71,796. This is excellent point. The cash outflow are at the beginning of the year, but the tax benefit are at the end of the year. We have found out present value. We have got the answer 471796. 471796. That is the present value of cash outflow for maintenance. Practically, I have got all the answers. I have taken into consideration everything. I can start with cash outflow. Before that, let me total out present value of cash inflow. 29,33,135 plus 4,22,364 minus 4,71,796. 28,83,703. Which is present value of cash inflow. Let us go to present value of cash outflow. See what does cash outflow says. The purchase price of the system is 20 lakhs. 80% of purchase will be paid in the year of purchase. 80 into 20 lakhs is 16 lakhs. Plus 1 lakh rupees is for installation. Will be 17 lakhs and it is at the end of 0 year. There is installation 1 lakh and remaining will be paid in next year. Remaining will be 4 lakhs. But it will be at the end of 1 year. So I will have to multiply a present value factor. Present value factor I can directly take it from here 0.870. Which will be 3,48,000. Total will be 20,48,000. This is the present value of cash outflow. We have also found out present value. So let us find out NPV, which is present value of cash inflow minus present value of cash outflow, which is 28,83,703 minus 20,48,000. 28,83,703 minus 20,48,000. 8,35,703. 8,35,703. This is my NPV. I can also find out my PI easily, which is 28,83,703 present value of cash inflow divided by present value of cash outflow. My PI will be 1.4080 is my PI. NPV is positive, PI is greater than 1. You can always accept the project. Excellent question. Why? Because of maintenance cost. They are incurred at the beginning of the period, but tax benefit will be at the end of the period. So because of maintenance cost, this is excellent question. Again for 10 marks, May 2022 question.